Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
Hello and welcome to this episode of our program. This is Mike Saunders with Marketing Huddle, and today we have with us David Barnett, and we're going to be talking about how to sell your own business and some different tips and techniques that we can implement if that is a desire now or in the future for business owners. So welcome to the program, David.
Oh, thanks, Mike. Thanks for inviting me along.
Hey, so first of all, the whole point is, if you've decided to sell your business or if you're toying with that, there's some things that you should be doing that would prepare your business to be sold, whether you use a business broker or try to do it yourself. So let's kind of lay the foundation and the groundwork for if that is a thought of yours of selling your business now or in the near future. What are some considerations that need to be taken into effect?
Well, that's a great question, Mike. In fact, one of the giveaways that I give away to people is called 12 things to consider before you sell your business.
Right.
And what's great about preparing your business for sale is that in preparing your business for sale, you actually get yourself a better business in the present. So when buyers go looking for a business, what many business owners don't quite get is buyers are buying cash flow. When I used to own a business brokerage office, and when people came into my office, I would say, "What kind of business are you looking for?" And people wouldn't say, "I'm looking for a machine shop" or "I'm looking for a flower shop." What people would say is they would say, "Well, I work right now in a big company, and I hate my job, and I earn $70,000. Mm-hmm. And if I can find something I love, I'm willing to work for a little bit less." And so people who are out there looking for a small business, they're making an investment in a business, but they're also purchasing a job because they're going to end up, in a lot of cases, being the day-to-day manager of the business. So, things like having a properly set up policies and procedures, having, that sort of Michael Gerber E-Myth framework put into place in the business so that there's actually, checklists of how we do business and what we do at different times of the year and that kind of thing, so that a new owner can see that a transition is going to be easy. But also, all those things that business owners know will improve the business need to be acted upon. A lot of business owners, when they get up in the years and they pay off their bank loans, for example, they start to get a little bit more complacent. It becomes easier to take off earlier and earlier on Friday from the business. They maybe don't call and follow up with that third time to try to make that sale. And because things are good, maybe they're earning a good amount of money. Like I said, maybe they don't have a bank loan to pay anymore. And the business is performing at a level lower than what it could be. And when you go to sell a business, buyers are buying cash flow, and businesses are valued on a multiple of that cash flow. Mm-hmm. So every dollar you can get in increased profit in the present, number one, that dollar ends up in your pocket. But number two, that dollar multiplies itself on the selling day as far as the amount of money that you're able to sell the business for.
Yeah, that makes total sense. And it's. I would suspect that it's similar to when you're trying to sell your house. And do you rake your leaves and paint the front and replace some things so that when someone walks in, they go, "Oh, what a nice place." And even as down to as the, I know this is cliche, but you've probably heard this before. The realtor will bake some cookies in the oven when they hold an open house, so people can smell that nice, down home feel. So some of the things that you just mentioned make total sense just from a logical standpoint. How can we, sweep some things up underneath the bed, not in an unethical way, but just kind of sprucing some things up. And I would also suspect, have you seen this in your experience? When you go through some of these things to kind of spruce up your business to prepare for sale, maybe it reignites the fire in your own self for your business, and you go, I've kind of gotten a little bit of momentum back here, and maybe I don't want to sell at all.
Well, it's funny because there's a lot of literature out there right now talking about how there's this tremendous number of businesses that are about to be put up for sale because of the baby boomers reaching retirement age. And one of the things that I've seen firsthand in the marketplace is that these projections, these ideas that all these businesses are going to go up for sale, are based on a false premise. They're based on the idea that business owners are going to retire at the age of 65, which is the age that employees typically retire. Mm-hmm. But if you think about this, Mike, if you are the owner of your business and you make the rules, and you've been doing it for decades perhaps, obviously you enjoy what you do, you know the business, you probably identify with the business, you don't have a boss barking at you that you maybe don't like, you are the boss. What I have seen is that if people have a very successful business that they grow and it means that they're going to sell and get millions and millions of dollars, they'll either leave when they get into their early 50s so that they have time to go and create some other kind of great legacy, whether it's through charity or being an angel investor or creating that other next big thing. Okay, so that's one point where I see them exiting. The next point that I see a large number of them exiting are actually closer to 70 years old, when they become physically less able to actually go in and do the work that they've been doing in their business. So I don't see as many people, I don't see this huge wave of business sales the way that some people in the press have been saying, it's going to arrive. I work with people all across North America who are trying to find a good business. And what's interesting is that really good businesses are often difficult to find because most business sellers don't want to go to a broker. That's why when I left the brokerage industry, I said, how can I use my knowledge and expertise to actually address the larger part of the market, which is the people who want to sell privately. Mm-hmm. And that's one of the things that I work with when I'm working with buyers is how to actually get ahead of the curve and meet people before they actually get to the point of putting their business on the market, so to speak.
Yeah, it's I'll bet this is a similar statistic. You've heard it said that LinkedIn is such a wonderful networking tool, and 85% of new jobs obtained are done by networking. Not necessarily through LinkedIn, but you go to the Career Builder, the Monster.coms or whatever, and see all these resumes and applications and things, and that's just like a flurry of overwhelm. But that number of 85% is what people are saying that how'd you get this job? Well, I knew this guy that introduced me to, or I met this person at. Well, that's where you're getting at is if you've decided to sell your own business, one of the great things to do once you've determined all the things you're mentioning, pricing and sprucing things up, well, get out there and start making some connections because you never know who you're going to meet. So any thoughts that way on some tips on what people can do to kind of start laying that groundwork?
Well, what I do is offer an alternative to the traditional business model of the business broker. So when I work with sellers, it's people who've decided they wanted to sell and they have not identified that potential buyer. And traditionally what a business broker does is he takes on the listing of the business and maybe charges an upfront fee, an engagement fee. And then they do all this work sometimes over the course of years. When I was a business broker, I had a file on my desk for 3 years before I sold that business. And with such a tremendous investment of time and the risk that you're not going to get paid if the business isn't sold, business brokers, because of this model, have to charge a rather aggressive amount of money. The average business broker, now this is for qualified business brokers, it's not for real estate agents who try to sell businesses or any other kind of intermediary, but qualified business brokers who maybe have earned their credentials from the International Business Brokers Association typically charge commissions of 10 or 12%. Okay? On $1 million business, that's $100,000 to $120,000 check to write. So many business owners, of course, don't want to write that kind of commission check. What I offer people is I do the specialized pieces of work that a business broker normally does, but I do them like any other professional advisor, like an accountant or a lawyer. So there's 5 steps in my process. The first step is education, where I teach people about the process of selling their own business. And largely it's through my books and my YouTube channel and things like this. And I do have an online course. Once they've gone through that education process and they know how things are going to go down, the next step is to evaluate their business and find out what it actually is worth. Many times business owners will overestimate the likely selling price of their business, and sometimes by as much as 100%.
Oh, my word.
It's simply a function of the fact that people don't buy and sell businesses every day.
Because it's their baby, they built it, they're working on it, they're too close to it, and they feel like they're looking at it through an emotional lens.
Well, and their business might be repairing cars or putting roofs on houses, but their business isn't selling businesses. Mm-hmm. So what I do in the evaluation process is I do what's called a normalization of their income statement, so that we can see what the free discretionary cash flow is in the business, and then I actually compare their business to other similar sized businesses in the same industry that have sold. There's databases where we can go to get this information. So we can show comparatively, this is the kind of price that other people have paid for your type of business of this size, of this cash flow. And once we have that price set, then we can set the asking price. And what's critical is you don't want the asking price to be too high. Many business owners figure, I'll ask a lot and then I'll come down in price.
Yep.
And here's the problem with that strategy. There are reasonable buyers out there. These are people with money and a desire to buy a business, and they're not ignorant. They're educated. They've been learning from guys like me online. They know how to buy a business. They know approximately what kind of multipliers of the cash flow are going to be reasonable. If you meet one of these reasonable buyers and you say, here's my cash flow, here's my price, and they go, wow, you're astronomically overpriced, they're not going to negotiate with you. They're just going to go away, because they're going to say, here's a guy or gal who is unreasonable and they don't know what they're doing. And they won't want to invest their time trying to educate you. They're just going to move on. But do you know who that business owner is going to meet anyway, Mike? They're going to meet the people who lowball everyone.
Yep.
So they're going to get the tire kickers, the people with no money, the people who don't have the ability to make a deal, and the people who are just going to give a low offer to everyone. And it's very discouraging, because I've met business owners before who have put their business on the market. Their price has been way too high. They met a bunch of people, potential buyers, and those opportunities now are lost. And even after they sort of reduce the price and stuff, those people have already looked at their business. They've moved on to other things. So it's got to be priced right from the beginning. And then the third step in the process is to do a proper presentation package. We call it a confidential business profile, so that when the buyer appears, we have everything together to make a competent professional presentation to the buyer. There's so many times when a buyer and seller meet each other and they have a positive discussion about the purchase of the business, and then the buyer wants information, of course, and then the seller says, well, I'll have to ask my accountant for that, or I still have to get papers over to the accountant for my last year end, and then the tax returns have to be done. You need to be ready to impress the buyer and have all your information already put together.
Because you lose that momentum.
You lose momentum, exactly. Yep. And most buyers, if they've gone down this path with someone before and it hasn't resulted in a deal, they're very sensitive to the fact that their most valuable resource in looking for a business is their time. I've worked with buyers who have wasted 6, 7, 8 months dancing with a seller, and then finally, when they got the information they wanted, they ended up not making a deal. Mm. Now, the next time, do you think the buyer is going to be so patient?
Yeah.
Probably not, right?
Probably not.
So we don't want to frustrate a buyer any more than we have to. We want to help that person achieve their goal, which is the purchase of a business. So step 3 is presentation. Step 4 is advertising. Now, business brokers advertise businesses confidentially because if you make it public that your business is for sale, your business can be destroyed.
Because your customers are like, oh boy.
Well, you know what? There's many different interest groups that if they find out the business is for sale, can have a negative impact. Employees. If employees find out you're for sale, many employees associate businesses going up for sale with businesses that are failing. Yep. If you think about the headlines on the newspaper, when does the town pulp mill go up for sale publicly? It's because the owners can't make money, right? Yeah. And a lot of the times you hear about these industries that are up for sale or closing. So many employees will assume that a business up for sale means a business that's failing. And the best employees always have an alternative employment opportunity. And most companies can't afford to lose their best employees. Customers you mentioned, if you sell anything on a contract for future delivery, or you have to back up your product with a warranty or anything like that, people are going to be afraid that you're not going to be around to honor that warranty. Suppliers can create an issue. I worked with a client once, and one of his suppliers found out that he was up for sale, and they immediately suspected there was something wrong with the business and canceled their payment terms. So all of a sudden they couldn't get 30-day trade credit from the supplier. So they had to come up with the money to start dealing with them on a cash-on-delivery basis. Well, many businesses can't afford to inject, an amount of operating capital equal to the receivables into their business. So that could potentially be fatal to some companies. And the list goes on. So what I do for people that I'm working with is I use those same advertising websites to confidentially advertise the businesses. And for everything that I do along this progression, I basically just charge a fee. This is what I'm going to do for you. This is what it costs. This is what I'm going to do for you. This is what it costs. And so people know what the cost is going to be. And then ultimately when the business is sold, there's no commission to be paid. And the reason it works for me, of course, is because everyone I work with is paying me a smaller amount of money rather than me, trying to sell 1 out of 10 businesses I have for sale and hoping to get my entire compensation from that one guy. And if you think about that model, if there's a business broker near you, he might have 15 or 20 businesses for sale, and some of them may not be very good businesses, right? And those are the ones that are going to be harder to sell. And that broker is working to try to sell all those businesses. But if you have the business that's the good business, because you built it properly and it's profitable, yours is the one that's going to be sold. You end up compensating the broker for all the time and effort he spent trying to sell those other businesses, which were losers. And how is that fair to someone who built a great company?
Yeah, it's all a matter of perspective, huh? And priority and focus.
Mm-hmm.
So what do you find is one of the biggest mistakes that people make when they start to try to sell on their own that you try to help them with?
The biggest mistake by far is not getting the proper advice with respect to valuation. And, there are many different kinds of professionals out there. And there are people who specialize in the valuation of small businesses, and they have the proper training to do it. Well, the biggest problem I actually have is when people go to their accountant and ask their accountant to value the business. And it's not that the accountants are trying to do something wrong or being malicious in any way, but the majority of accountants spend all of their time preparing tax returns and financial statements. Very few of them spend a great deal of time working on business valuation and helping people buy and sell businesses.
Sure.
Right. And then there's another category of business evaluators who typically work in mid-market businesses. And sometimes the problem we run into with them is they'll use mathematical methodologies to value a business, which are applied to companies that have $15, $20, $25 million in sales. And when you apply those methodologies to smaller companies that have $1 to $2 million in sales, they tend to overvalue those small companies. So I've had cases where people have invested a great deal of money getting expert advice from other kinds of professionals, and then I'll go through my process and I'll say, you know what, based on what other people have paid for businesses like yours, this is the actual value. And it can be disheartening for some of these guys.
Sure.
But the price, and you know what? When you get a price, if you're whoever you're working with, whether it's me or someone else that you want to work with, all you have to do is put yourself in the buyer's shoes and say, if I was going to buy this business, how would I put the money together and how would I finance it? And would I be willing to hand that money over for this cash flow?
Mm-hmm.
And it can become pretty clear pretty quickly what is reasonable and what is not. And in determining value, one of the things that people often mess up is they'll muddy the waters by not properly separating the different types of assets that are mixed up in their business. The biggest problem being real estate. If you have a business, let's say a dry cleaning business, and you own the building that you're in, you're actually in two different businesses. You're in the dry cleaning business and you're in the commercial real estate business.
Yeah.
So that building, it demands a certain cash flow. If you were renting that space out to someone else, they would have to pay you a certain amount of money. And what we do is we do a normalization. So if we have a business that owns the building it's in, we say, what would the imputed rent be? What would the normal fair market rent be to be in this building? So that we can actually separate out the business activity of the dry cleaner
as if
from
you didn't own the building.
Right, because the building is a different asset, right? And in a lot of the cases that I've advised on, I've shown people that it's a lot more expedient to actually end up separating them in the final deal. So they find someone who wants to buy the dry cleaner, and they get that person to sign a 10-year lease, and then they go sell the building to somebody else, or just keep it.
Or retain the building, and there you have some cash flow.
Yeah, exactly.
Mm-hmm.
But a lot of sellers are under the idea that they just want to cash out. They want to sell it all. And, a lot of the times it just doesn't work that way. Especially in the world of small business acquisition financing, a lot of sellers are surprised to learn how difficult it is for buyers to get financing. And that, let me think. In all my years and all the deals I've advised on and done myself as a broker, there's only been one deal where the seller walked away with all of his money at the closing table. And well over, 200 to 250 deals where they've had to hold back some amount of financing.
Mm-hmm.
So they walked away with some money and a vendor take back note. And that's just the way it is in that market.
Yeah. Makes sense. Well, obviously there's 10,000 more aspects to consider and do and tweak, but how can people learn more about how to sell their business? I'm sure you have some good resources on your website. What's the best way that people can reach you?
Well, if somebody has a business and they want to learn more about selling their business and how I can help them, the website is howtosellmyownbusiness.com, and there's some free resources there that you can help yourself to. Links to my YouTube channel, which has all kinds of videos about buying and selling businesses, and to my book, which is called How to Sell My Own Business, which hit the #1 spot under entrepreneurship back in April on Amazon. My blog site is davidcbarnett.com, and basically every week I put out content. If people go to the blog site or to howtosellmyownbusiness.com, they can sign up for my email list. And I'm not an abusive emailer, Mike. I send one email a week. That's it.
Nice. Well, thank you so much for your time. It was wonderful learning some of these nuances, and I appreciate your insights.
No problem. Thank you for having me on.
Thanks for listening to Business Innovators Radio. To hear all episodes featuring leading industry influencers and trendsetters, visit us online at businessinnovatorsradio.com today.